Check out shares of Buy Now, Pay Later, the platform Affirm, moving lower this morning after the company provided, he's sitting right here, so it hurts me to say it, weaker than expected revenue guidance. Joining us right now with more on the quarter and beyond, Affirm CEO Max Levchin. Good morning to you.
Good morning.
Okay, so let's understand what's going on in the last quarter, and then let's try to understand what's going on with the guidance and what you're actually seeing.
Last quarter, judge for yourself, 36% year-over-year volume growth. Revenue growth also 36%. RLTC, which is a fancy term for profit measure that we prefer, 53% growth. It's pretty good.
It's pretty good.
Pretty good. Guide forward, I think really strong numbers. We think we're, going into uncertainty, we are offering our shareholders a sense of we're going to do just fine.
And you think that just the market, to the extent that the market's not even open, but obviously down 6% as we're looking at it in the futures?
I cannot pretend to understand how the market thinks. I can tell you that it took consumers and merchants and sort of the universe about a decade to figure out what we are and just how different and important what we have found to work really is. This whole buy now, pay later thing. 13 years ago, people were telling me not charging late fees is nuts, not compounding interest is crazy. When you say 0%, you're supposed to have an asterisk where there's the fine print, that's where the business model lives, and we said no such thing. And it was slow for a while and not all at once. And my plan or my wish for the market is to eventually oh, wait a second, this is really good.
What is your sense just of the strength of the consumer right now?
It's pretty good. I think there's a real inconsistency in the vibe where people are stressed out about the economy, yet they're shopping, they're buying, and they're paying their bills. At least they're paying their bills back to us on time. Our credit print actually from last quarter, and you can see it every month because a lot of our credit results are reported every month, is really solid, very, very consistent with our expectations, not rising.
That's really interesting. We heard from Bank of America Institute this morning, and they said the same thing based on all the data they see from their customers. Do you think that this is the consumer worrying about things, but they're not changing their behavior at this point? Our guest this morning tied it back to the idea that there's still a very strong jobs market and that wages continue to rise.
That's exactly right. The only metric that I really care about running a credit business is employment. If employment is strong, everything's going to be just fine. And employment has been really strong. The last job print was fantastic from my point of view anyway. And so I don't see anything in the water yet that makes me worry.
Is there any shift in terms of the kind of purchases that people are making, the amount of money that they're spending? Are they are they upgrading from a 75-inch TV to an 85-inch TV, or are they downgrading from an 85-inch TV to a 65-inch? To the extent that that means anything.
We delve into this data every single day, and the short answer is we saw really strong growth across every category. Yesterday, somebody asked me on an earnings call, so where did you see particular strength? And I was scrambling through numbers, everywhere. The number from this morning, I think you quoted 1% increase in credit card and debit card spend, 36% increase in Affirm spend. There's some difference here.
But it's also that you're stealing market share. You're
absolutely. We
base.
are helping people understand that not paying interest, revolving interests excessively is a good thing. And yes, we're taking share from credit cards. But right now, the economy appears to be on solid footing.
Can I ask you it's sort of a crypto-related question of sorts, which is in a stablecoin world or crypto world, how does that ultimately affect you? And what do you think how will that change your business if you think that the world moves in this direction?
You and I have been on stage together talking about crypto a little while ago, and my views remain about the same. I think Bitcoin in particular is a fantastic store of value. I think that's proven to be the case, and today's numbers are one good proof point. Stablecoin has really nailed this exceptional use case of very fast foreign, cross-border money transfer, and I think that's very useful. And as a company that's now expanding internationally, we just went live in UK, went live in Canada a little while ago, so it becomes more and more relevant to our business. In terms of folks paying for things, I think we're still very heavily dollar-centric here, and I'm not sure that's going to change.
But will that whole universe ultimately break the banks and put you into a position where all of a sudden you are the credit? You are trying to be the credit card. Right?
We're trying to replace the credit card.
Trying to replace the credit card. But I would assume that would accelerate in a sort of stablecoin-oriented universe.
insofar as people become more comfortable with tools that don't look as traditional as the things that work for their parents, yes, I think the secular trend is towards using things like Affirm to replace credit cards.
And in terms of merchants and just bringing more merchants on board, the idea of who's exclusive to you, who's not exclusive to you, how that even works. Obviously, Klarna's playing a big role in the universe. I don't know what's going on with Walmart. Maybe you can explain. But I think we're all trying to get a sense of this.
So merchants are also doing quite well. I think a fair number of them are posting really strong results, and part of those results is the fact that the consumer is really choosing Affirm at the point of sale. Done really well. The thing we highlighted actually on the call yesterday and last quarter, merchants are really leaning into 0% promotions where they are essentially paying the interest that consumers would have be otherwise paying. And so it's a true, it's a great value. You're paying for something that is quite expensive over time, but not paying any interest on it at all. And even if you are late by a day or miss a payment, you're still not paying any penalties. That was a huge driver of growth for us both last quarter and the one we just reported. Many merchants have reached out to us and said that really worked for us over the holiday season. Let's do it again. That's a fair amount of the growth that we saw comes from that. Certainly not my place to comment on competitors, but we seem to be growing, somewhere between 50% and 100% faster than just about anybody else in the industry. So I think we're doing really well.